Hi everyone, welcome to the show. Before the bell, but Purdia Capital. And today is Monday, the 15th of June 2026. And with us again, our friend and partner, Steve. Hi, Steve. Hi, everyone. Welcome to the show.
Mid-month, new week, ready to go.
Perfect. So, guys, today is a big day. We had the SpaceX IPO on Friday, and I think you have seen it all over the weekend. Everyone is talking about it. And we also have a part of the obviously soccer championship, football championship. We also have the big news of the US and Iran basically coming to an agreement for a ceasefire. And this time it's actually it looks legit because Iran themselves and Pakistan are also talking about it publicly. So it's not only Trump writing it on Truth Social for the 40th time, 20th time, whatever. So it's basically also officially confirmed by Iran and Pakistan. So I think this is what gave the markets its positive impulse and its overall bullish direction where it will go. So, Steve, let's talk a little bit about the SpaceX IPO and the news.
So what do you think, Henry? Are you looking at the SpaceX or just observing like most people?
I mean,
Unless you're an insider, like 'cause there are a lot of insiders, invested 10 years ago. So you can tell us, Henry, if you're an insider.
it's a tricky one, right? Because
Yeah.
we're currently sitting before the market opens at already 170 dollars.
Yeah. So it's not cheap.
The Yeah, it's not cheap because they said like the price that we have been officially publishing them for it's 135. So we're well above. And so at this price point, I mean, I just like to be honest. I don't know. Everything can happen. It
Yeah.
can pop to 200, it can pop to 300, but can also go down to 135, right? And maybe even lower. Who knows? Depending on the structure of the deal, the banks might step in at the official number, and in order to create some market pressure from there, so we might see an initial push upwards, as we have seen with some prior IPOs. But you never know because you're not on the inside. As you
Yeah.
just said, we're not an insider, so we don't know about details of this particular deal and the structure of it. So for me personally, I think for day trading, swing trading, that might be good for long-term investments. Actually, guys, talking about this, let's not forget our super important and chart. So do your own thinking. Don't take anything we're saying for granted. And not financial advice. It's pure personal opinions. And yeah, also we hope educational content for you that will help you get better and understand some things better along the way. So yeah, again, I'm not sure. I'm not sure what to think about it, right? Because it has been pushed up so so hard, basically.
It's the highest IPO in
They-
history, right? Like that was like
yeah, it
$1 trillion
was.
valuation.
Yeah, it was like first of all, it was the highest IPO in history,
Yeah.
and considering the size of it, it's also crazy to think about that they are still running at a huge loss, right? They're having they're generating some revenue, but they're still running at a huge loss. And given the size of the IPO, it's actually like and nobody and like there's no comparison. So you cannot say, will they be able to sustain this growth and sustain those revenue numbers in order like what's the market size, right? It's space. So you're basically just like, yeah, okay, it's space, so it's infinite revenue, right? Kind of. And I think that's the story of the whole thing. It's basically the narrative of it, right?
Yeah, it depends what they bring back. Because of course, Elon, he's looking for the energy from the sun. He has his Starlinks in space. So he is starting to generate some interesting ideas, more ideas than what NASA did. Because it seems like NASA, they just did research, experimenting, didn't actually bring back money. But with SpaceX, he has other ideas. So let's see what happens.
I mean, I think the interesting thing for many people is basically that they took X, they put it into XAI, and then they took XAI and put it into X space, right?
The X space, yeah.
SpaceX. So I think this is also something to consider. So it's basically all right, running at a loss, running at a loss, running at even bigger
Yeah,
loss,
yeah.
and so they're all, but now they're all consolidated, and so it's a huge story. And I mean, it would not surprise me if this thing goes much higher. But as I said, nobody knows, no financial advice here. I think it's nobody can know, right? um, Anything can happen. And as we know, with Musk, he is a really good showman, so he can really make people follow him. Like
Well, he has the
basically,
ideas because he says if he would have to start over, he wouldn't need a penny of savings because he has the ideas, he has the sales pitch, and he knows how to bring money in. So he said
yeah.
that's the thing with business and entrepreneurship. You don't actually need money. You just need to know the people, the networking, and the good ideas, and then the money will come to you. So it's very interesting.
uh, Sounds also super simple, right?
Yeah. Sounds nice, doesn't it, Henry?
So nice, yeah, yeah. And yeah, I think this is for SpaceX. But nevertheless, as I wrote in the title, SpaceX is basically an addition to the whole Iran and Trump. It also pushes up the whole tech stocks, right? As we see here, Apple, Microsoft, they're all on the positive. So they're all profiting from the positive energy of the SpaceX IPO. And so basically all positive things are coming together. Peace fires, SpaceX positive, huge success of its IPO, and also the market confirms it on the technical level, as we will see now. But before we'll take a look at this, Steve, can you tell us a little bit about news? Do we have any news today? Is anything important coming up?
Yeah, we just had a few minutes ago. It was on the high impact area. Just give me a second. Just at this stage, yeah, usually I look at either Financial Juice or my FX book, but I think my FX book just gives a clear picture of what's coming up. We're looking US markets, so let's look at high to medium impact. What's happening on the US side? Yeah, we had New York Empire manufacturing news that just came out, and it seems like the actual was 5.7, so it was a big miss there. Negative surprise, I would say. Not too much happening price action wise. We had a small sell off that occurred right away, which is no surprise because, yeah, we did have a bit of a miss. So, sell off happening right now. I won't label it as a level because volatility in ATR is still level. Of course, I have my gap level, but I will talk about that later. That came in overnight, global open during the weekend, of course, of the ceasefire news that got confirmed that Henry was talking about. But so far, yeah, on the economic front, if anyone's interested, this could also have an effect long term. I would say, not sorry, not long term, but more medium term for the next few months until the next print, if there's any sort of big or small difference there. But yeah, it's high impact. So any stocks, economic wise, any assets that you're holding that are a little longer could have an effect. And of course, we're always looking at volatility on Nasdaq itself. Small effect until New York comes in. Of course, New York Open is the main impulse that we always check out. But so far, not much impact on the growth stock side. The industrial production, also something that's coming in about half an hour at around 8:15, medium impact. And this is just like if we get the hit, if it's a strong print, strong economic signal, tailwind for Nasdaq, very limited selling since it's on the medium impact side, but good for tech, good for rate pressure, all that kind of stuff. So just something to look out for. And also about half an hour after, half an hour before New York Open, we have the market index. And again, low impact for Nasdaq, still something that's coming up, could show small volatility signs. But overall, the print is looking bearish right now, looking into New York Open. No surprise on the miss. And that's all we have for today. And I can also get into the gap, the meaning behind the gap and what happened. But yeah, we'll let you continue, Henry, and then we can talk about the gap later, since that's a topic that can lead into New York Open. But yeah, so far, negative print, negative price action. No surprise.
Okay, cool. Then thanks for that, guys. Then let's take a look at the big picture, daily chart of NQ. What happened? So we had this major support area here. So we basically broke the support through. It became resistance. Then we now gapped through the resistance area. So now it becomes support again, right? So this is the area we are watching. It's super important to us. At the same time, we also had this upwards rising bullish trend line where basically, I mean, it's a textbook, right? It's a textbook gap back through acceptance of the trend line. So now the next target is the all-time high sitting at 30,800 points. What do we might see here? So basically, we might see a possible correction if the market touches or extends the high, but then will not be able to follow through. We might see a correction to the downside, or at least some range building in this area. But if the market manages to break through, and like with a forcefully goes through the all-time high, then sky's the limit, right? And we are all above new all-time highs, and then it will be probably all across the news, will be hyped up. CTAs and many other players will need to start buying again, and all those kind of things, and then we will probably see a continuation to the upside. So, but as mentioned, the level 30,800 points is basically what we're watching, because it can either be a bullish scenario here if we manage to break through. If we don't manage to break through, we'll basically have a kind of a reaction to it. And yeah, Steve, maybe we can talk about the gap right now as it's opened here. It's, I mean, it's actually a quite big gap as well, right? We are looking here 660, over 500 points, so it's almost 550 points gap. It's quite a big one.
Like from the gap. Here, let's see here. From the gap open, about 230. Or are you talking about the top side of the candle, 500 points?
Yeah.
But either way, big gap. No surprise, because the meaning behind it, the story behind it is very strong. Something that's been part of markets, part of our news front, our mindset. Everyone, whether you're involved in futures trading, long-term trading, or just reading the news, everyone's involved in the entire world. Everyone's looking for the peace deal and just move on with business, and to bring energy prices down, because high energy prices is going to affect everyone's cost of living. And what do we have? We have a strong reaction. I'm just looking at oil right now, down about 5% since Globex open, and big gap down on oil, no surprise. We don't look too much into oil, but of course, when there's a big economic event like this and there's a big meaning, then it's important to look at. And now that the deal is complete, like Henry said, Pakistan, Iran, they also confirmed the deal, reopening of the Strait of Hormuz, remaining the removal of the U.S. blockade that came in. So what does this mean? Ending the conflict, restoring oil, shipping flows, import-export that affects about, I would say, half the world through that Strait of Hormuz, with Europe, with Asia, and all the checkpoints. So this is very important news. And the market, and especially NASDAQ, reacted bullishly. Because why is that? Because it's a tech index, it's growth, it's forward looking, and it always wants stability with its stocks moving forward and its momentum. So we've got the strong gap, bullish direction with our pre-market now. And what's the point, my friends? You guys are tuning in, you're thinking, okay, before the bell, what does this mean? We focus on high impact levels, we focus on catalysts before the opening bell, before New York Open, which is coming in about 40 minutes, and how you can plan your day and set these important levels that have these stories behind it, that have meaning behind it. So that's the whole point of this. And we had our first economic news come out. not much impact, which is no surprise, but still good to make note of. This level is about right around 30,557. If we had a larger impact, I would mark this level out, but nothing so far. And we're just going to focus on the gap for now, which is up since open. Yeah, about, I would say, yeah, like Henry was saying, 500 points, but the gap itself is up about 200 points. Gold up also about 3%. Any questions? Let us know, you guys. If you guys are trading gold, if you're trading indices, I can get into the ranking a bit later. But no surprise that oil is down now 5%.
Okay, then let's continue for the time being with the big picture of the daily charts. I think today it's actually it will be super fast because we have basically the same picture on all of the indices, right? So we take a big look. NQ approaching its all-time highs. S&P broke through its previous support area, now resistance area, basically broke through, gapped through, right, sitting right underneath the previous trend line. So once we go above, it reestablishes the upside, basically the bullish trend line, and we are approaching the all-time highs once more. I mean, it's actually funny. We have been talking about this one over the last couple of weeks, right? With the Dow, that we are now. It's not actually for us. It's not no surprise that we broke through the all-time highs, and yeah, a really beautiful chart-like formation. I drew it out. It's a measured move here.
Yeah, I was going to say the measured move. I'm looking for the measured move.
It's measured. Yeah, it's basically really like a measured move, right? And so the target here is 55,000. Actually, you know what? Let me round it up. I have a gut feeling. I have been, in the beginning of the year, I've been joking around with a friend of mine, and it was like, hey, the market loves fancy numbers. And 55, like, you don't see those kind of things too many times, right? Those kind of numbers.
555, yeah.
555.
That's the measured move, yeah.
Yeah, and plus a measured move, right? So I'm really looking at this level because it will get a lot of attention at one point. And the measured move sits just a little bit above 55, like 20 points. It's nothing, giving the size and scope of the possible movement here. So yeah, but I mean, I can say nothing, right? It's still upside, super strong upside momentum. So be careful to fight it. If you fight it, then if you decide to go against the overall bullish trend, then only if you have a valid strategy for counter trends. Russell looks a little bit trickier, right? Because we have basically we had value area here, and we established area here and area here. So
it's level to level, it seems like.
It's level to level, yeah. But this one is actually the hardest to trade, right? Because it's more really for the intraday play. You get in, take some points, get out. But those kind of things, they are hard to sit through if you're a swing trade, because it comes back so forcefully. And yeah, but nevertheless, we have the trend line here, and the possible target is somewhere around this area. We can also make a measured move, for example, like this here. But then actually, that's the crazy thing. If you take a measured move on the Russells, it needs to be above its upper trend line. So it's basically here. And this is approximately 17%, 18% higher than where we are right now. Seems like crazy. A lot. It looks crazy, but with the markets right now, can easily be achievable in a week or two.
So, and with the power of the US dollar and DXY keep going down, then it's people also got to remember that, the power of fiat currency, because everything is based still in fiat currency, which is why assets always rise in time. Or,
Yeah.
sorry, indices. Not assets, sorry, indices, because there are many
No
assets that
worries.
never rise in time.
Yeah. Also, last week we have been talking about, at least Steve and I have been talking about gold, right? And you remember, Steve? I told you. You remember? I told you. I
You got the
told you what I
spike.
want to see. I
Yeah, yeah,
told you I want to see the market to spike through, to
yeah.
take out a lot, to grab the liquidity, and look at this gap,
Perfect. Yeah.
double gap. So there's such a strong upside momentum. But again, guys, you never know, right? You never know, and I think this is the most important thing that many people misunderstand. It's either all of those hindsight traders. What would I done, right? But it's not about this. It's not about being right. It's about scenarios in your mind that you create, like for both sides of the play. What can happen? Where can you go short? Where can you go long? Because you don't know, but you need to be prepared for both sides of the possibilities. And if one side doesn't work, then either wait or consider the other side. But you need to be prepared. It's not about being long only or short only. And yeah, in this case, worked out perfectly, but many times it doesn't. So um, yeah, silver, similar,
Yeah. Double
s-
bottom. Yeah.
double bottom, and I would have preferred if we would have taken out or retested this low here, but still super beautiful. And yeah, this chart, guys, this chart is actually already 3 weeks old when Steve and I started when we discovered this pattern, basically the
The
big bull
scary bull
flag,
flag. That big
the
scary
scary
bull
bull
flag.
flag, yeah. And my argument was like, we have seen it the whole time, but I said through the whole time, like, all right, I hate those kind of super big patterns because they look so scary. And yeah, currently, so we broke below even on the weekly chart, right? So we broke below. The next level is sitting right here, this orange support area, sitting at around 7,850. Let me write this down. 7,850. And this is the area to watch. So we really don't know what will happen from there. I think it will get retested. And there's maybe one thing to consider about the ceasefire that doesn't get enough attention on the news, is basically the fact that this is just a memorandum, an agreement, basically a pre-agreement to talk about an actual agreement, right? So the idea is that there will be a 60-day period for the ceasefire, and where in this time they're like aiming to agree on all the outstanding points, on all of the open points, all the details. Um, and I expect actually this time period to be very very volatile, because Israel doesn't want the ceasefire, and it's basically Trump who is pushing through it. And I think it will be very volatile. So always be aware. Always have a financial site like Forex Factory, Financial Juice, open, or X. Follow some accounts who are always reporting about in real time.
Yeah.
And if you see an instant movement in the charts, like I don't know, like on the 1 minute candle, 100 points move to 100 points move, then always check the news, right? And don't fight it, because those impulses are usually caused, they're not random. They are caused by news that you're not aware of yet, right?
Yeah. Especially, because again, it's Purdia, it's a prop firm. We are intraday. We are day traders. So it's very important to always be aware of these impulses, of these headline news risk that's going on day to day. Of course, if you're a swing trader, if you only look at the weekly, monthly charts, different story, because the volatility is not going to affect your position as much, because your stop loss is spread out much more. Whether you're in the options market or even just the stock market, then a lot of times if you're just in the stock market, you don't even have a stop loss, right? You just DCA until it goes up. But
Yeah.
we're using the futures market. There's a lot of leverage. Risk management is key, which of course we'll always talk about, and we can talk about later. But always be aware, because market's very jumpy. regime change is different now. Of course, with Trump's term has been for the last year. Before it was a big tariff news, now it's a big ceasefire news. If this goes away, there's always going to be something new. Every quarter, there's always going to be some sort of risk on the table because the market wants volatility. The market does not want to just calmly float lower or higher. It always needs some sort of risk to
Yeah, I mean, and with especially with Trump in place, there's no quietness.
no
There's
finance,
always
no
something.
such thing.
There's always something going on, right?
And this is good for us intraday traders
Yeah,
because
true.
if you're on average looking for, let's say, just a 1-to-1 or a negative R, and you're getting these stronger momentum plays, and you're on the right side of the market, then yeah, there's different plays where you can just take off maybe 20%, 40, 30%, or even just half your take profit, trail the rest, let it play out if the moves are a lot stronger than they were before. So on the RR basis, this could be a lot better for you guys if you manage it properly and if you're on the right trend, of course. But if you're we had the big spike Friday last week, and I messaged Henry and I'm like, yeah, there was the impulse. Of course, I closed my position a lot earlier on the long bias, but impulse came in. But you can't predict these things. Of course, if I held my position through the impulse, would have made a lot more money. But I'm not going to FOMO in. But imagine how many traders probably FOMOed in top of the candle as
Yeah, I mean, we will talk about it later in the chat. I will show you guys how you can easily measure and actually calculate your size and how you should calculate your size in terms of the account size you're using. So stay tuned. We'll talk about it later. So, right, VIX volatility. Yeah, as we have been also talking about it, compression, right? And the money is on selling volatility once again. So we took out the swing high here, reversed. Current trend is basically, I would say at this point, it's a close of the gap, right? It's the gap is here. So I would say this is the target that we're watching. Gap close 16.00. I think this is their current target for VIX. But guys, once more, no financial advice. It's pure, everything can happen, right? We don't know. One tweet is enough and VIX spikes up 50% on the way above 23. It's all it takes. One tweet, one statement. And so therefore, always be aware of this. Yeah, so it's actually also a chart from last week. So you see what happened. We have been talking when we have been drawing up this chart. We have been sitting here this on the 5th of June, this big breakthrough candle to the downside, and I said, like, all right, so this trend line here was resistance, had become support, become resistance. The market consolidated inside bar. Then we took out lows here, took out some liquidity, grabbed some liquidity, went up, retested the area. Actually, no, we're currently retesting the area on the Qs. Actually, what we did on Friday, I'm sorry. And now the market, as you see here in the drawing from last week, I said if we break above, then we will move up. And this is actually what is happening. And as you see from the drawings, right, some of them were from last week. And all it takes is to have some good levels and patience. And I think this is the current curse that most of the traders are struggling with. It's actually being patient enough and to wait for the setups to show themselves, right? Because with all the FOMO going on, everyone, all the streamers and influencers showing off and payout pictures all over the place, everyone thinks he needs to be in the market all the time, but it's actually the opposite. The really good traders, they sometimes don't even trade at all. They just take one trade per day. So they wait for the good setups to show their hands. And because, as I will show later, it's all about size management, risk management. It's not about how much you make. It's about protecting your downside and loss reduction to staying in the game long enough. If you have a positive edge, then this will play out by themselves. So yeah, what do we expect? We had this gap here. We had this gap left open at 735. So there's the market to watch. Currently at the pre-market open, we are sitting above. So I think in this scenario, if we will not be able to break through, then it's still upside momentum, right? If we break through, then the target is a possible correction is at 730, basically a gap close, I would say, in my opinion, on the triple Qs. SPY, again, beautiful, right? We had this bullish pattern here. We broke it to the downside. Now we are re-establishing it, basically re-entering it again. And we are up market over 1%, 1.2%. So again, next target is retest of all-time highs. And if we manage to break those, then we will go, I think, much higher than we are currently at. Korea Composite Index, yeah, we have been also talking about a lot about this one last week.
Henry's
2 weeks
favorite.
ago. Yeah, it's my favorite. I mean, it's
the big
looks
squeeze.
like the big squeeze. Yeah, it like this one was actually like a big squeeze, especially considering how fast it went down, right? And where do we sit? We have gap closed here, so we almost closed the gap. Yeah, almost. So we still have this gap here open. And then the all-time highs, right? So everything is bullish, guys. Everything is bullish. SpaceX, bullish. Apple, range. Microsoft. Let's zoom out. What do we have in Microsoft? Possible bottoming. Then we had a second tier support area here. Doesn't it? So we had a second tier support area here that we retested. And we are now basically on the way up. But again, we don't know if we go down, then we also might do this here. Google, Meta, yeah, so who cares, right? By the end of the day, almost all of you, as I know from our data, almost all of you are trading NQ. So there's one.
This is why I'll speak about NQ later. Yeah.
This is the one to watch. And before I dive into its intraday specifics and we take a look at possible risk management things to consider, I give over to Steve, and let's take a look at your correlation metrics.
Yeah, so I'm index trader. I like to look at all 4 indices for strength, for weakness, and as Henry said, majority of you trade NASDAQ as well. So this is the main topic of the stream because, yeah, we're prop traders, my friends. We look at intraday. NASDAQ specifically gives us the greatest opportunity for volatility. Of course, we're not saying yes, Dow Jones or Russell, our good friend Russell 2000 cannot offer it. But when you look at liquidity, when you look at the movements, the velocity, of course, NASDAQ beats them all. But before that, let's just see how NASDAQ traveled since overnight. If overnight inventory, clearly everything bullish, everything in the green. So we mapped that out. We have the gap right around 30,190. So what I like to do is look at where we are currently sitting now. I would say always leading into New York Open. My mind says we're neutral territory. So for neutral territory, what is the downside risk? That's the gap at 30,190. And then I like to zoom out and see where our upside risk is. So if it's going to be a trending day, where is price most likely to land to? So where I zoom out and I look at what was happening in the previous days, I always look at New York Open to New York Open, highest volume node of the day. So for me, this is the most important open of the day, no matter whatever economic news there was, or impulse, ceasefire news, gap up. It's always New York Open to New York Open. And looking at where we're going to open today, right around 35,600 area, I zoom out and I see where we are. We are right around Thursday's New York Open at 30,600. So isn't this interesting where we get the gap up? Where is price heading to? It's heading to the next area, of supply. Like this is the real area of supply and liquidity. So we mark this out, drag it all the way along. And let me just use this instead. And yeah, boom, right there, level to level. This is where we currently are right now. So if I'm matching up these two levels and looking, okay, if we continue the bullish momentum, where is our upside risk? Upside risk, we take the measured move, as Henry did. Instead of now from the long-term measured move, we take the intraday measured move. We move it up and spread around the nice big whole number of 31,000. I would say, you know what, 31, I would say actually 30,950. 30,950. And where's this? Close to all-time highs. And this is measured up right around, I would say, yeah, Wednesday's New York Open. New York Open was a bit higher, right around 31,000. But look at these highs, these nice highs that could be taken out and give us a strong push for liquidity to the upside. So I wouldn't be surprised if the momentum continues, if we don't have any bearish news, any bearish catalysts, the deal's done, or bad economic fronts, then yeah, the next measured move higher would be 30,950. Mark this level out. And these are my levels for the day on NASDAQ. Now some are asking, what is this market ranking? What meaning does it have? This is what I use. Oh, sorry, this is what I always have visually in front of me. I always type out manually because anything I type out manually, everyone knows this too, whether it's pen and paper or on the keyboard, has greater meaning, greater effect on your brain, and you remember it a lot better as well. So every day on my pre-market, because again, remember guys, this is the pre-market checklist, before the bell plan, before taking on any trades, type out or write out your plan, your levels, then you remember it a lot better once the time comes to put on risk. So I have my levels mapped out right around, let's see how many points. It's about close to 1.5%, 370 points from level to level. So we could expect lots of volatility for the day. It doesn't have to happen right away. We could get a slow grind right after New York Open. We could get a strong push, some consolidation. We don't know what's going to happen. New York Open is always unknown. So always wait for that to come, and that's coming in about 17 to 16 minutes. And let's get into the market ranking. So we have the level to level. NASDAQ I have as number one because NASDAQ gave us the strongest push after that gap. So this is the spread. This is the live ranking of asset rotation. So I'm not comparing this in fiat. I'm comparing this from asset to asset. So I'm just going to quickly show you guys what I mean and what I use. So I use the ratios. I use NQ against ES, against Dow Jones, and here against RTY. And since the open or the gap, you can see that New York was much stronger than all other indices. You can also compare this to gold, any other correlations, but since the strongest correlations are these four indices, this is what I use. And the ratios help me cut through the noise. So any alignment for divergence, a lot of times the days are neutral and I put neutral, but since we had such a strong push after the gap, bullish momentum, bullish news, I mark these out, and NASDAQ is the rank for today. And you can also see on the percentage basis where NASDAQ's already up 2% for the day. So this gives me the strongest confirmation. So if I'm looking for any longs for the day and NASDAQ continues that momentum, because of course, we can have a big sell-off right over open, or we can consolidate for 30 to 60 minutes and then sell off. We don't know what's going to happen. But if I'm looking for longs, I'm only looking for longs on the NASDAQ front, staying away from Russell and Dow because, they're mid-grade, they're strong, but they're not as strong in NASDAQ. And then ES is last place. So let's quickly look at Russell 2000 since it's second right now on the list and see what levels we're looking at here. Okay, so we have the gap here on Russell right around 2,983. And as you can see from the push from the gap, it's now just consolidating. So this is also a reason why, it's not the strongest. And I would stay away from because the momentum is not as strong. If we zoom out, Russell has already taken the high. So, you could say for the past few days, Russell 2000 is stronger, but we're intraday. I'm only worried about the overnight inventory connected to New York Open. But if you zoom out, then you can say, yes, Russell 2000 is the strongest. We already took out the highs. We are already in no man's land, which also I don't like trading as well because you can't really base any new levels. But if we take, let's say, the gap and just place the measured move from the gap to the open currently right now, it would be right around, so right around this area, but yeah, not much volatility, just above the gap, and the measure move right around the 3,000 area. And we never touched this area before. This would be the all-time area, no man's land. So right around 3012 on a Russell 2000. And these would be the two levels I'm looking at right now.
I just want to add one thing, maybe, as for the Russell. I think Steve is next to me, one of the few people on Earth, especially in the prop space, who trades the Russells.
No way. Because I speak to many traders. So is Henry. Henry sees all the statistics, and I'm very surprised because I know traders that are traded, but you see the stats, and if you're saying that,
no, there are some people trading it, but it's
crazy.
like in comparison to NQ and ES is it's minority of a minority.
Minority. But then again, we still have to look at it because the correlation is there, the volume is there. It's still a heavily weighted index. And which I'm surprised because, we can always talk about this later if you guys have any questions about Russell. But, a lot of times Russell can move on its own momentum, even though it does move very similarly to the other indices, but it doesn't have the MEG 7. It doesn't have the major, it has the smaller cap stocks. And these can move a lot more aggressively, whether it's bearish news or bullish news. Not all the time. As you can see today, it's stuck, had the gap up. Now it's stuck in consolidation. But with New York Open, we've seen the moves on Russell. It could just spike like 200-300 points within minutes. But something to look out for. But for now, because the overnight has been consolidating, hasn't given us too much volatility, these are my levels for today: the 3012, the 2984, and of course, if we get a push right below the gap, then I wouldn't be surprised if we get the gap closure right around 2950. If we'll get it today, I don't know, but just to keep that in mind. So yeah, with Russell second place, now let's look at Dow Jones and see what we can expect the up and downside on Dow Jones. Yeah, Dow Jones seems like it already took out the highs pre-market. If we zoom out, you can also say, yes, Dow Jones is close to all-time highs here. We can mark this out. Always an important psychological level, right near the highs. So the probability of us taking out the highs is definitely there. If anyone has any stops above it, manage your risk. If you have your stop, all we can say is, if that was your validation point, don't move it, keep it there, because we don't know. Maybe it does make a lower high. You get the nice bearish price action after open. But for now, this is what we're looking at Dow Jones. Currently, right now, 52,180. Let's see if it lines up. Yes, it does line up. New York Open from Friday was right around there, right around the 52,000 area. So let's just mark this out. New York Open. And we're just testing it right now. So we broke through it on the ceasefire news. Broke through that New York Open, retesting it. Looks like it wants to go for the all-time highs. But let's just place that level on the gap because that's the most important level of the day. Measured move, line it up right around New York Open, or you know what, let's line it up on all-time highs. Since we're right at all-time highs, I think that's more important. So 51,700, if anyone's trading Dow Jones. Henry sees the stats as well. I don't know how many people trade Dow Jones. I still know many traders that trade it, but still, it's probably down there compared to NASDAQ. it's nowhere near.
In comparison to NASDAQ and the prop space, there's no. It's in a league of its own. There's no competition. But
so marking up the new level again. Dow Jones all-time high, no man's land. People always ask, "Hey, Steve, how do I mark up the levels if we're no man's land? We cannot mark out any previous day's supply lines or demand lines." New York opens, highs and lows. So this is how you do it. You do it from the measured move. So from an important level to another important level, this is how I measured it. And this would be around the 52,000, I would say 680 to 700 area. So let's just mark it out right now. As Henry knows, I like the whole numbers. Always mark out the levels at these important whole numbers, and that's what we're going to do. And
I mean, there are studies that prove that round numbers have an edge to it. So therefore, if you don't know where to go, at least you could always take a look at the round numbers.
Yeah, exactly. So yeah, this is where we're looking. If we got a strong trading day, the next area where, if you got the long setup, if you got the good bias, or if you got the short setup and you're like, you know what, I don't believe it's going to hit the measured move. I believe it's going to be a lower high, and that could be maybe your stop loss or your risk area. So yeah, this is how I measure it out. This is around over 400 points in Dow Jones, which is close to a percentage point. And yeah, like Henry was saying, volatility is high, so I wouldn't be surprised if we can hit these points intraday. We don't have to hit it intraday. It can also be a level to look out for next day. But this is what we're seeing on Dow Jones, currently up about 1% on the day. And now let's just quickly look at Russell 2000, just see what it's, or sorry, not Russell 2000, but ES. Remember, you guys, ES, just because it moves slow, it doesn't mean that it doesn't produce that volume, because SPY.
Trust me, the market opens in 8 minutes. Then
market's open.
Its slowness will change soon.
So currently right now, slow grind after the ceasefire. No surprise there. But I was just gonna say that a lot of times ES moves a little slower, but ES produces the most amount of volume. It's the number one asset in the world. It's the golden ticket if you're looking to deploy your liquidity, which is what Citadel, Goldman, all the big hedge funds and banks are doing. And there's a reason why they put majority of the liquidity into the S&P 500. So if you zoom out S&P 500, also another reason why I have it on the lowest rank is making lower highs. If you zoom out, currently sitting at 7,500, let's just say 7,600. Gap below is right around 75.43. So let's just do the measured move from the gap below to the current price right now. And also I want to zoom out and just see currently right now, are we sitting at an important level? Yes, no. Right below. So it's interesting how NASDAQ was sitting right at the New York Open of the previous week, and ES is sitting right below it. Sorry, where NASDAQ was sitting right on top of it, and ES is sitting right below. So that's very interesting right there. Let's just mark this out and then go back into intraday, right around 7,600, where you can say, this area was landed as support. We broke through it on Friday. Now looking at it as resistance. So a level of supply, not demand. So we have this important level right above here as well. I can say, just mark it out as previous weeks New York, just to keep in mind. If I'm looking into, let's say, either a long or short opportunity, I know this level is right above me. That can cause some friction. And that's the whole point of these levels, of see what area is causing friction. And just to mark out from level to level, let's just see the next area of supply if we meet it on the day or for the week. Yeah, and that's right around close to all-time highs. Not exactly at all-time highs, but pretty close. Let's mark the whole number, 76, 75. As another area of resistance. So ES has two areas of resistance. NASDAQ only has one, which is also why I have the ES marked out in last place. So from level to level, let's see how many points. Sorry, go ahead, Henry.
Yeah, I just want to add one thing in terms of white space. This is like the biggest thing that I have discovered that most of the traders are struggling with, and there's actually those all-time highs, white spaces, because there's no place to put your stop loss behind, right?
Yeah.
And people don't wait. Everyone is experiencing FOMO, everyone is hyped, and then they're just going into the market, but there's no space because there's no past history of volatility, of market discovery. where to place a stop behind. And it's actually perfect if you're a disciplined day trader, intraday trader, and you're really trading from a 1-2 minute chart frame, because then you can use those micro levels, and this gives you plenty of possibilities. But from what I'm seeing, people are just basically going long on all-time highs with a with a 20-point stop
Yeah,
on
yeah,
a on a already 500 points move. I can talk about it in a sec.
yeah,
And they just blowing through the accounts, right? And the
yeah.
same for the short side. So it's similar pictures. People just randomly try to fight a trend and go short, and also burn through their accounts
Yeah,
on
of
both
course.
sides. And yeah, but I will showcase it in a second. But
Yeah,
just want to say, like, be careful, everyone, for the white spaces, new all-time highs, because we don't know how far it can go, right? If
yeah,
market goes frenzic and just keeps on rallying, it can easily go limit up. It can easily go either like a slow grind that kills you slowly but painfully,
yeah.
or it can just like explode to the upside tremendously. So have always your stop in place, know your risk, proper position sizing, and don't fight the overall trend. That's
Don't fight the trend. And this is why a lot of traders as well wait for the first 15 minutes, the 30 minutes, or you can say the initial balance, the first hour, because they use that as their range to mark out for the downside and the upside as well. So yeah, we can always look at the current day's like first 15-minute range once it opens, the opening range. But that's coming up in about a few minutes. We're getting New York about that. Yeah, so this is when I zoom out a little bit. These are my ES levels. Previous New York acting as support, now resistance. On this was about Thursday's open, and of course our impulse level of the day is the gap. So always mark out the one important level, what's pushing markets for today's range, and then zoom out on the other picture of where the other previous New York ranges were. And we're seeing around 7,600 and 7,650. And then once New York opens and we get the first 15 to 30 minutes, then we can also map out our intraday levels and see how we can place our stops, how we can place our risk. Not so much not so much how to place our risk, because strategy, everyone has to come up with their own strategy. Knowledge is free. Everything's available online, whether YouTube, whether, other communities. But in a way to calculate your risk and measure your sizing, Henry and I can always help when it comes to that, when it comes to prop firm and what's available for Purdia. So yeah, this is what we're seeing for ES, and this is the strongest pair that I'm looking for today. If I'm looking for any short ideas, I will be looking at the S&P 500.
short ideas or long ideas.
Short ideas only. ES is the weakest for today. So if it continues that trend, unless things switch, that's why it's a live market ranking. I'm always updating this list every 15 to 30 minutes. So things could change. But for now, with Globex overnight inventory and the gap up, this is what we're seeing. And I'm looking for shorts only on ES. And if I see any long ideas, then NQ only.
I just want to add one thing. So what Steve is basically doing, it's a common strategy that is used a lot in the stock markets, but is not used as much in the futures markets. You're basically always looking either for the strongest players or for the weakest ones. But in the stock space, you have thousands and thousands of stocks, right, that you can choose upon. But on futures, we don't have that many opportunities. We have like our 20, 30 assets that you can trade properly with proper liquidity. And yeah. So guys, always set a timer for the market open so you don't miss it. It's I always have a fixed time on my phone, so I don't miss the open. So yeah, but it's just I like to finish it. This is basically what you do, right? You're either on the short side momentum, on the bearish side, or on the bullish upside momentum, and either either like using the strongest one or the weakest one for the shorts, and this gives you an additional edge for your style. And then in between, it can vary, right? The point of entry, the exact setup can be different, but this is how you actually increase your odds and try to stay away from the ranges that will kill you in the zone in between, right? And so therefore it's an excellent idea. If you want to learn more, check Steve's links description down below. All right, we have a countdown in terms of market open.
One second.
SpaceX, let me quickly SpaceX is sitting at
Space.
171. So let's say where we open. When we started the call today, we have been at around 169, 170. So let's say if the upside opening up with a gap of 6.7, 6.6%. So let's say how the market goes, how far we can go.
Is it a gap up? Yeah, it's a gap up right
Yeah. 6.6%. So
yeah, markets are up. MEG 7, all green. So the question is, Henry, is there going to be a MEG 8 now,
I think,
or
yeah,
is it going to swallow Tesla and it's just going to be part of Tesla?
like, to be honest, who knows? But actually, I don't think so, because from what I have heard, he has a controlling power over SpaceX of 84% or something.
Yeah,
The,
that's
the
crazy.
way the way it's structured. So I'm not sure if he wants to kind of dilute his huge position with Tesla, right? Because I think I don't think so. To be honest, I don't think so. I think he will just keep the whole control and play around with it. All right, let's take a look. What was NQ doing? Yeah, continuing upside momentum, and maybe